In a significant case that highlights concerns over financial regulation and enforcement, the U.S. Department of Justice has exposed the role of TD Bank in facilitating extensive money laundering operations. From January 2014 to October 2023, TD Bank reportedly allowed approximately $8.3 trillion to pass through its systems unmonitored, enabling money laundering activities for Colombian drug traffickers and several major money laundering networks, including a Chinese crime syndicate operating in New Jersey. The case has resulted in TD Bank agreeing to a record $3 billion penalty for failing to maintain a compliant anti-money laundering program. This marks the first instance of a U.S. bank pleading guilty to conspiring to commit money laundering. The Office of the Comptroller of the Currency has imposed a rare asset cap on TD Bank, restricting its ability to expand in the U.S. without regulatory approval. Central to the case is Da Ying Shi, referred to as David by TD Bank employees, who was pivotal in moving roughly $474 million through bank branches in several states, including New Jersey and New York. Despite repeated warnings from regulators and internal audits, TD Bank failed to act on these alerts, allowing criminal activities to exploit its systems.
As the bank admitted in the statement of facts, which it filed today, at various times high-level executives, including the person who became the bank's chief anti-money laundering officer, knew there were serious problems with the bank's anti-money laundering program. But the bank failed to correct them. 3 money laundering networks took advantage of TD Bank's failed anti-money laundering system. First, over the course of a 3-year period, a person who TD Bank employees knew as David moved over $470 million in illicit funds through TD Bank branches in the United States. David has separately pled guilty to laundering drug proceeds through the bank. David had attempted to launder money through numerous financial institutions, but he found that TD Bank had the most permissive policies and procedures and so chose to launder most of his funds there. He also bribed TD Bank employees with more than $57,000 in gift cards in furtherance of his scheme. David's illegal conduct was obvious, to say the least. On more than one occasion, he deposited more than $1 million in cash in a single day. He then immediately moved the funds out of the bank using official bank checks and wire transfers. TD Bank employees at many levels understood and acknowledged the likely illegality of David's activity. In August 2020, one TD Bank store manager emailed another store manager and remarked, quote, "You guys really need to shut this down, LOL."
The revelations have cast a spotlight on Canada's regulatory environment, which some experts argue is lenient and susceptible to international crime. U.S. investor Mark Cohodes contended that Canada faces a dire need to address this reputational harm, warning that lax regulations could transform Canada into a haven for third-world criminals. The scandal has also led to notable changes in TD's leadership, with CEO Bharat Masrani announcing his retirement in the wake of the controversy.